Welcome to One Wrong Move, where one small decision set the whole chain in motion. Today's story starts with one server out of 8 that a technician forgot to update and ends somewhere nobody saw coming. 9:30 in the morning, August 1st, 2012. The stock market opens. And one of the biggest trading firms in America starts losing money faster than almost any company in history. Not because of fraud, not because somebody hacked them. Nobody stole a thing. A piece of dead computer code woke back up. Code that had been switched off for 9 years. Code somebody forgot to delete. It woke up on one server, 1 out of 8. The one a technician forgot to update. And in about 45 minutes before anyone could shut it off, it would trade away the entire company. Around $440 million, gone before lunch. The company was Knight Capital Group. In 2012, Knight was one of the largest market makers in American stocks. A market maker is the firm sitting in the middle of the market. When you buy a share, somebody has to sell it to you that instant that somebody is the market maker. They stand ready to buy and sell all day long, so your trade goes through in a fraction of a second. Knight did this for a huge slice of the everyday stock trades in the United States. They were that big. Say you bought a few shares of a company through your broker in 2012. There's a real chance Knight was on the other side of it. You'd never have known their name. They handled billions of dollars of trades a day and made their money on the tiny gap between buying and selling. Small margins, enormous volume. The whole business runs on software. No trading floor full of people shouting, just code, routing orders to the market at machine speed. Knight's order routing software had a name. They called it SMARS. Here's all you need to know about SMARS. A big order comes in, say, buy 1 million shares. SMARS chops it into small pieces and feeds them out to the market a bit at a time, so it doesn't move the price. The big order is the parent. The little pieces are the children. And SMARS ran across 8 servers. 8 identical computers, all running the same code, sharing the load. Remember the 8 servers. Now go back almost a decade to 2003. Inside SMARS, there was a piece of code called PowerPeg. PowerPeg was a testing tool. Its whole job was to do something no real trader would ever do on purpose. Buy high, sell low, over and over on purpose. The point was to shove a stock's price around inside a test. Then Knight could check that the rest of their systems reacted the right way. It was a controlled tool for a sealed-off test environment, useful, and completely catastrophic if it ever got loose in the real market. Around 2003, Knight stopped using PowerPeg. But they didn't do the one thing that would have made this story impossible. They didn't delete it. They just switched it off. The code stayed sitting inside SMARS, dormant, dead, but still there. How do you switch a feature off without deleting it? You use a flag. A flag is just a switch in the software. On the feature runs, off. It sits there and does nothing. PowerPeg's switch was set to off. And then in 2005, somebody made one more small change. PowerPeg used to keep a count. As its little child orders got filled, it counted them, so it knew when the job was done, and it could stop. In 2005, an engineer moved that counting function to a different part of the code. PowerPeg was switched off anyway, so nobody retested it. Why would you test dead code? But that move quietly broke the part of PowerPeg that knew how to stop. So now there was a piece of dead code sitting in the system that did 2 things if it ever woke up. It bought high and sold low on purpose, and it could never tell when to stop. And nobody was watching it. Why would they? As far as everyone was concerned, PowerPeg was retired years ago. It wasn't in anyone's job to think about it. It just needed someone to flip the switch. Now jump ahead almost a decade to the summer of 2012. The New York Stock Exchange was launching a new program for retail investors, a new way for ordinary buy and sell orders to get matched up. It was called the Retail Liquidity Program. It was going live on August 1st. Knight had to update SMARS to handle it. So their engineers wrote new code. And they made a decision that sounds completely reasonable. They decided to put the new code where the old dead PowerPeg code used to live. Clean it out. Reuse the space. Tidy. And to turn the new program on, they reused the old switch, the same flag that, years ago, used to turn on PowerPeg. On the new code, flipping that switch on would start the new retail program, exactly what they wanted. And this would have been completely fine, as long as every single server got the new code, as long as not one of them was left running the old version with PowerPeg still inside. But think about what that switch does on a server that never got the new code. On a server still running the old code, that same switch turns on the same thing it always did. PowerPeg. If you can already feel where this is going, stay with me, because it's worse than you think. And if this is your kind of story, hit subscribe right now. Which brings us to the deployment. Deployment just means copying the new code onto the real servers, the ones doing live trading. In the days before launch, a Knight technician went server to server, loading the new code by hand. There was no written checklist for it. No second person checking the work. One person, 8 servers. And the new code reached 7 of them. The 8th server got missed. Nobody noticed. There was no system in place to catch it. The deployment looked done. So now 7 servers were ready for the new retail program, and 1 server still had the old dead code on it, with PowerPeg sitting there, and that reused switch about to be flipped on. The morning of August 1st, before the market opens. Knight's engineers turn the new switch on across the system, getting ready for the 9:30 open. And the system starts sending out warnings. Automated emails fired off to a group of Knight staff, each one flagging a strange error message tied to the routing system. The message had 2 words in it that should have stopped everything cold: PowerPeg. 97 of these emails went out before the market even opened. 97 warnings. But these emails weren't built to be alarms, they were just routine messages, the kind that pile up in an inbox. Nobody had set them up to scream, so nobody read them in time. The warning that the company was about to destroy itself arrived 97 times, and it sat in an inbox, unread. 9:30. The opening bell. Orders start flowing into Knight's system the way they do every single morning. 7 of the 8 servers handle them perfectly. New code, new program, business as usual. But some of those orders land on the 8th server, the one that got missed. And on that server, the switch is on, and PowerPeg wakes up. 9 years asleep, and it does exactly what it was built to do. It buys high, it sells low, and because that counter got broken back in 2005, it has no idea when to stop. So it just keeps going, order after order after order, thousands of them a second pouring into the live market. Buying high, selling low every single time. Knight loses a little money on every order, multiplied by a flood nobody can stop. On the trading floors of the exchanges, people start noticing dozens of stocks going haywire all at once. Ordinary, boring stocks, suddenly swinging on huge volume for no reason anyone can see. Something is hammering them, again and again. Nobody knows yet that it's all coming from one broken server inside one firm. Stop here. Look at what is actually happening. A company worth about $1 billion is being emptied out by a program nobody had used since 2003. Dead code nobody deleted. Woken up by a switch the engineers reused because it was sitting right there. On one server. 1 out of 8. The one a technician missed while copying files, with no checklist and nobody double-checking. 45 minutes. $440 million. That's the one wrong move. Not fraud, not a hacker, not a rogue trader betting the firm. A reused switch, a line of dead code nobody deleted, and one server out of 8 that one person forgot to update. Every single one of those things on its own was tiny. Together they emptied a company before lunch. Now watch them try to fix it. This is the part that's hard to believe. Inside Knight, the engineers know something is badly wrong. Money is hemorrhaging, and they don't know why. There's no written playbook for this, no drill they'd practiced, just a room full of people watching the numbers and trying to guess. And their best guess is that the new code they just shipped is the problem. Which is a reasonable guess, so they do the reasonable thing, they undo it. They pull the new code back off the 7 servers that had it. Think about what that actually does. The new code was the only thing keeping 7 servers safe. It was the thing that turned that switch into the harmless new program. Strip it off, and now those 7 servers look just like the broken 8th one. Old code. Switch on, power peg. They didn't put out the fire. By their own later accounts, they spread it to all 8 servers. For a few minutes, the bleeding didn't slow down. It sped up. This is what happens with no plan and no time. The instinct to undo your last change is usually right. This time, it was the worst thing they could have done. It took about 45 minutes from the opening bell to finally cut the order flow off for good. Around 10:15, somebody pulled the plug. 45 minutes. That's how long it takes to lose everything when the thing that's killing you runs at machine speed. Here's what those 45 minutes did. Knight's system had fired millions of orders into the market. They added up to about $7.5 billion in stock the firm never meant to buy or sell. More than 4 million trades actually went through, across 154 different stocks. When the dust settled, Knight was holding billions of dollars of stock it had bought by accident, and it owed billions more it had sold by accident. It had to unwind all of it. Sell what it shouldn't have bought, buy back what it shouldn't have sold, at a loss, every time. When the accountants finished the math, Knight had lost about $440 million. The Securities and Exchange Commission, looking at the bad positions themselves, later put the figure even higher, over $460 million. Either way, in about 45 minutes, Knight lost more money than it had earned in the entire year before. A company worth about $1 billion at breakfast was, by mid-morning, broke. The market figured out fast that the bad orders had come from Knight. And Knight's own stock started falling off a cliff. Inside 2 days, the shares had lost more than 70% of their value. A firm that had spent years becoming one of the giants of American trading was suddenly days from disappearing. Thousands of people worked there. None of them did anything wrong that morning. The trade had simply happened at machine speed before any human could step in. It didn't have the cash to cover what it had just done. Without rescue, it would not survive the weekend. 4 days later, a group of investors stepped in with about $400 million to keep Knight alive. It worked, barely. The firm kept its doors open, but the price was the company itself. Within months, Knight agreed to be swallowed by a rival trading firm. The deal closed the next year. Knight Capital, the independent giant, was gone, folded into a new company with a new name. If this is landing, take 1 second and subscribe. A company that big, gone in 45 minutes, because of one unupdated server. That should not fade from your memory. A little over a year later, the regulators finished their investigation. In October 2013, the Securities and Exchange Commission settled with Knight. Their finding wasn't that anyone committed fraud. It was that Knight had no real safeguards to stop a flood of bad orders before it hit the market. No checklist for the deployment, no review, no alarms anyone would actually hear. Dead code left sitting in a live system for 9 years. Any one of those on a normal day was a problem you'd never even see. The disaster needed all of them to line up at once. On August 1st, they did. Knight agreed to pay a $12 million penalty. It was the first time the agency had ever enforced this particular rule, a rule it had written 2 years earlier for exactly this danger. The rule said firms had to put guardrails between their trading software and the open market. Hard limits, a break. The rule existed. Knight just hadn't built the guardrails it called for. Step back from the whole chain. It started with a piece of test code that should have been deleted in 2003 and was only switched off. It ran through one small change in 2005 that quietly broke the part of that code that knew how to stop. Through a decision to reuse an old switch instead of making a new one. Through one technician, no checklist, copying code to 8 servers and missing one. Through 97 warning emails nobody was set up to read. Through an opening bell and a switch flipping on, and 9-year-old dead code waking up on one server. Through a panicked fix that fed the fire instead of putting it out. 45 minutes. Around $440 million. The company gone. That's the one wrong move. A switch that got reused, and 1 server out of 8 that one person forgot to update. And the line that stays with you when the rest of it fades. The warning came 97 times, and it sat in an inbox unread while the company traded itself to death. Dead code nobody deleted. A switch nobody should have reused. 1 server out of 8. If this one got you, hit subscribe. One wrong move drops a new one twice a week, and the next one is worse.